Good morning and welcome to the Morning Bell. I'm Robert, joined by Lizzie and Steve. It's Monday, March 16th, 2026, and we have a lot to cover today. Lizzie, what are the main themes you're seeing in today's news?
Thanks, Robert. Well, the dominant story continues to be Bitcoin's strong performance, which hit a 6-week high of $74,400 earlier today. What's particularly notable is how Bitcoin is behaving as a safe haven asset during the Iran conflict, actually outperforming both gold and stocks during this period of global turmoil. We're seeing massive institutional accumulation, with Strategy adding another $1.6 billion worth of Bitcoin last week, bringing their total holdings to over 761,000 BTC. That's significant because Bernstein is now calling them a Bitcoin central bank of last resort, which speaks to the strengthening institutional demand base. On the corporate side, we're also seeing interesting moves like Metaplanet raising $255 million specifically for Bitcoin accumulation, and Tom Lee's Bitmine making substantial Ethereum purchases. The Ethereum Foundation just sold $10.2 million worth of each to Bitmine in an over-the-counter deal, which some are interpreting as confidence in the asset rather than a bearish signal. What's really catching my attention is how crypto is decoupling from traditional tech stocks, with Bitcoin's correlation to tech weakening, even as it posts what could be its best week since September 2025.
That's a significant shift in market dynamics. The institutional accumulation pattern you're describing sounds like it's creating a more resilient price floor. What does this mean for traders and investors looking at the crypto space right now?
The key takeaway for traders is that we're seeing a structural change in Bitcoin's holder base, moving from retail-dominated to institutional-dominated, which historically reduces volatility and supports higher valuations over time. The fact that Bitcoin is holding above its 50-day moving average and maintaining support around $71,000 to $72,000 suggests the bullish momentum has legs. For investors, the risk-reward is interesting here because while we're near recent highs, the institutional bid provides downside protection that wasn't there in previous cycles. That said, we need to watch for overbought conditions in the short term, and the upcoming Fed rate decision on Wednesday could introduce volatility. The other important development is BlackRock's recent statement that most investors only want Bitcoin and Ethereum exposure, which validates the thesis that these two assets are becoming the digital equivalents of gold and treasury bonds in portfolio construction. For altcoins like Solana, we're seeing potential breakout patterns with UL testing the $100 level, but I'd be cautious about chasing those moves until we see Bitcoin establish a clear direction above 75,000. The memecoin surge we're seeing is typical late-stage bull market behavior, which means risk management becomes critical at these levels.
That selectivity between established crypto assets and speculative plays is going to be key for risk management. Steve, let's shift to the economic calendar. What's on tap for today and the rest of the week?
Thanks, Robert. Today we have industrial production data being released, which measures the output of manufacturing, mining, and utilities sectors. The previous reading came in at 2.3%, and this indicator gives us insight into the health of the industrial economy, which has been showing resilience despite broader economic concerns. This is a medium volatility event that particularly affects industrials, materials, and energy sectors, so we'll want to watch how the market interprets any deviation from expectations. Looking ahead to the rest of the week, we have several high-impact releases that traders need to prepare for. On Wednesday, March 18th, we're getting the federal funds rate decision, which is the big event this week. The forecast is for rates to hold steady at 3.75%, unchanged from the previous 3.75%. This is a very high volatility event, and the Fed's statement and press conference will be critical for understanding their view on inflation and the economic outlook. Also on Wednesday, we're expecting producer price index data with a forecast of 0.3% compared to the previous reading of 0.5%. PPI is important because it's a leading indicator for consumer inflation, so any surprise here could influence the Fed's thinking. Later in the week on Thursday, March 19th, initial jobless claims will be released with a forecast of 215,000 compared to the previous 213,000. This gives us a real-time read on labor market conditions. And finally, factory orders data is also scheduled for Wednesday with a forecast of 0.2%, down from the previous 0.7%, which would suggest some cooling in manufacturing demand.
That's a packed week with the Fed decision being the main event. Lizzie, let's turn to our stock of the day. We're looking at MDA Space, ticker symbol MDA, which just completed its US IPO and dual listing on the NYSE. What's your analysis here?
Robert MDA Space presents a really interesting but cautionary case study. This is a Canadian space technology company specializing in mission systems, robotics, and satellite solutions for both commercial and government operations. They just raised $300 million through their US IPO on March 12th and are now dual listed on both the NYSE and Toronto Stock Exchange. The stock is currently trading at $30.65, which is near the top of its extremely narrow 52-week range of 30.35 to 30.72. Now here's where it gets concerning. The stock has a forward PE ratio of 30.65, which is quite elevated for an aerospace and defense company. And here's the real red flag. The analyst consensus target price is $16.29. That represents a 46.8% downside from the current price. So, we have this unusual situation where analysts rate it a buy, but their target price is nearly half of where it's trading. This typically happens with IPO momentum pricing, where retail enthusiasm and the excitement around a new listing pushes the price well beyond fundamental valuations. The company operates in an attractive sector with growing demand for satellite communications infrastructure, and that $300 million in fresh capital gives them runway to capture market share in US defense and space contracts. But the valuation has already priced in substantial future success.
That's a massive disconnect between current price and analyst targets. What would you recommend for investors looking at this stock, and what are the key catalysts to watch?
For new investors, I'd say wait for a better entry point. The risk-reward at $30 doesn't make sense when the consensus target is $16. I'd look for a pullback to the $20 to $22 range before establishing a position, which would align better with analyst expectations and provide a margin of safety. For anyone who got in at the IPO price, I'd hold but watch the next couple of earnings reports very closely to see if they can execute on their growth strategy. The company has legitimate opportunities. Government spending on space programs is increasing globally. There's strong demand for satellite infrastructure, and they have expertise in mission-critical systems and robotics that are valuable. The risks include the capital-intensive nature of the business with long project cycles, competition from aerospace giants like Lockheed Martin and Northrop Grumman, and potential share dilution from the recent offering. Looking at year-end targets, I think a conservative estimate would be $20 to $24 as the stock normalizes toward analyst targets. The bear case would be a full reversion to $16 to $18, while the bull case, where IPO momentum sustains and they execute perfectly, might keep it in the $28 to $32 range. The forward PE of 30.65 leaves almost no room for execution mistakes, so any disappointment in earnings or contract wins could trigger a sharp correction. My actionable take: this is a wait-and-see situation where patience will likely be rewarded with a better entry point in the coming months.
Solid analysis on a tricky valuation situation. Let's wrap up with crypto trends. Lizzie, what's the outlook for Bitcoin, Ethereum, and Solana heading into next week?
The sentiment across major cryptocurrencies is bullish heading into next week, but with some important nuances. Bitcoin is showing the strongest setup, currently trading around $72,800 with solid support from ETF inflows and institutional accumulation. The key level to watch is $75,000, and if we can break and hold above that before the Fed decision on Wednesday, we could see a move toward $80,000. The institutional versus retail dynamic has shifted dramatically, with firms like Strategy, Metaplanet, and Bitmine leading the buying, which creates a more stable holder base. One study found that 72% of subsea cables would need to fail to impact the Bitcoin network, which reinforces its resilience as infrastructure. For Ethereum, we're seeing strong momentum with the price climbing above $2,000, up 8.8% recently, and leading the broader crypto market higher. The Ethereum Foundation's $10.2 million OTC sale to Bitmine is actually a positive signal because it shows sophisticated buyers are accumulating at these levels. Shapeshift founder Eric Voorhees also bought $56 million worth of ETH, and Vitalik Buterin is promoting updates to simplify node software, which improves accessibility. BlackRock's recent statement that most investors only want Bitcoin and Ethereum exposure validates these as the core holdings for institutional portfolios. Ethereum has a path to $2,500 if the momentum continues. Solana is the more speculative play, but showing interesting technical patterns with an ascending triangle formation that could push it past $100. The network jumped as much as 6% in Monday's surge and is benefiting from the broader altcoin rally. However, I'd be cautious with Solana and other altcoins because the memecoin outperformance we're seeing often signals late-stage exuberance. The main risk factor for all three is the Fed decision on Wednesday, which could introduce short-term volatility and potential overbought conditions after this strong rally. But structurally, the institutional adoption trend and crypto's decoupling from tech stocks are bullish developments for the medium term.
Appreciate that comprehensive crypto overview, Lizzie. That wraps up today's Morning Bell. We covered the institutional shift in crypto markets, a packed economic calendar with the Fed decision as the centerpiece, and a cautionary tale with MDA Space's valuation disconnect. Remember, do your own research and consult with financial advisors before making investment decisions. If you found today's discussion valuable, please subscribe to the Morning Bell and join us tomorrow as we continue tracking these markets. I'm Robert. Thanks for listening.